I really think the U.S. tech, the AI theme, has to crack. Unless that doesn't, we're not going to see the rotation from the Asia-based and international funds back into these names.
Let me ask you on that very point, because this will build out your point as well. Can we have a set of circumstances where the China tech names can get that rally if US tech cracks, though? Can that divergence occur? Is that possible, or will it just go completely risk off?
Well, we, as you know, we are in touch and in contact with a lot of Asian-based accounts that trade into the U.S. Everybody is in the U.S. tech names. Everybody. And nobody's selling these names because why would they, Will? Why would they, Tanvir? Why would they, right? Every day you come in, NVIDIA is making a new all-time high. Look at what Meta is doing after hours. Look at what Amazon is doing after hours. It's been a safe haven, and people are saying, why should I abandon these names that has given me a return every day? Why should I move away from something like this and invest in something that risky that hasn't given me any kind of a return, right? In the circumstances that everybody's piling on this AI thing. Why should I? SMCI, it's a name, I wrote on it today, and it was an $800 million market cap company, now it's $30 billion.
Farzin.
Why would I get out of this thing that goes up every day between 5 to 6%? So I really believe, as comical as may sound, Tanvir, right? I think we need a crack in the U.S., people to have this rotation, and I think it's the rotation trade that may save the day for the Chinese ADRs.
It could also be a case of low tolerance, right, for high cash burn businesses in China that do not have a very strong business model that is protecting them from the downside. Because, yes, JD.com is down 63%, and I don't think you've given me a complete explanation of why you still like the stock. But a Pinduoduo is up 22% in the last 12 months, purely because they're going global. And it's working out quite well for them in terms of how they're utilizing that cash for expansion.
And they're not domiciled in Hong Kong. You're 100% correct. It almost feels like anything that doesn't have a Hong Kong theme to it, people believe in it.
But
and
they do have mainland presence. Farzin, they did start on the mainland. Especially in Tier 2. Yeah. Tier 2, Tier 3 cities particularly.
But the stock's not dual listed. You know, Alibaba's dual listed, JD.com is dual listed, Tencent is dual listed, PDD is a single stock that trades here in the States only, right? And I don't think that's an excuse. I'm not going to use that as an excuse. But you know, if you look at it, it's not a Hong Kong domiciled company, even though it used to be. But I'm not necessarily saying JD is the name to be able for us to park our money in. Or, you know, I think all the big cap names, we can talk about Alibaba, Bilibili, Baidu, I mean, we have it on the screens right now. These are the names that people have completely grossed. You need the real investors to come back in, and we haven't seen it. And it really starts off with mainland investors.
Of course, but what if, instead of, if we do get that US tech crack, and that's I could not agree with you more. What if it doesn't rotate into China tech? What if it chases Japan and follows the momentum and follows the flow and follows all of the expectation that there's significant upside that we just heard a couple of minutes ago? They're pumping another $8 billion of subsidies for these companies to use Google Cloud and the like. So why China? That's the thing with all of the inherent risk.
Well, because everybody is invested already. There's been a massive, look at the EPFR data that came out in Japan, right? I think the way we've seen China has been performing is to the detriment of what Japan has been doing. That money has been shifting. I mean, you know, Goldman had this whole piece on it. Hartnett had this whole piece of it. Over the weekend, I sent a chart that is Hong Kong tech versus the Japanese tech and the divergence. That money has been rotated. I think everybody is already invested. I think everybody has piled on. That's why I don't think there's more appetite at these levels of getting, you know, more exposure in Tokyo Electron, so on and so forth. So I really think people are looking for underperformance. People are looking for a way to look at cheaper valuation companies. I mean, the U.S. names are trading at 30, 35 times now, some of these names, right? So by every mean, they look expensive, but, you know, they're priced to perfection. They're not going down. Let's put it that way. It's amazing to me, but
Farzin, we need to
once
take a
it does,
break.
and it's going to come, I think that money may go to China, and I'm hoping that's going to go to China.